Hey folks, so we're going to run through weekly charts here, and there's a bunch of them. So I'm going to do it in alphabetical order in case there's one in particular you want to see, then you don't have to go through all of it. There are a lot of stocks here that are breaking out and are worth your attention. So just pay attention to it. I know, Friday stocks went down, everyone got nervous. Stocks do go down. It's actually healthy. And you're going into the third week in January, which is usually a fairly tumultuous week. And the inauguration, if you go back historically, these weeks are bad, the week coming up. But that doesn't mean that this one's going to be. It's just I would say more of a forecasting or a foreshadowing on what may or may not happen. So, as always, consider subscribing to the channel and turning on notifications. We're going to do some more videos. I'm getting requests on doing videos on risk, process, psychology, books. So just keep the ideas coming because I do pay attention to them. That's the whole purpose of me doing this, to actually educate as what it takes to be consistent and profitable. So please keep them coming, but consider subscribing and then turning on the notifications because some of this is very timely. So let's get to it. Okay. Thank you to the people that keep calling me out for not putting this in here. So what we have here on Apple, okay, and we can go back a little further, but we had a massive run from 82 in January last year to 138, we'll call it. It was just massive. And that's an enormous run for a very large cap stock with this kind of market cap. So what we're seeing is, and this is what happens, we're seeing the bars get wider and a little wilder. When that happens, it usually signifies a change in trend, or that trend may change. And that's exactly what happened here, right? We see these big, wide bars getting wider and wider, and you have this huge, which you could even refer to as a flagpole, which broke down. But what's interesting about this is you can see how, as we got wider and wider, and what's happened? We've just consolidated. Now, can you make money through the consolidation? Sure. I mean, absolutely. Here's that trade that we talk about a lot. We call it the boomerang trade. And it executed here. And you can see what happened. Here's your trigger, runs up, never sees this again. Respects your 50-week, respects your 21-week moving average. And it's almost like a guide. So around here on Twitter, I mentioned that, hey, you may want to take a look at this. It runs into earnings, January earnings historically, and it does. This is pretty historic if you go back and look at the past decade of the stock. So it did exactly what we thought it would do. It ran up to this high and then rejected on a really nasty bar. This one looked like it might reverse, but it did not. And now we have another third week bar down. So what we do is we look at this and understand that this is a pattern, not the only pattern, but one that I'm going to try and hammer home so that we can at least learn some patterns. 1, 2, 3. 3 black crows. Okay, so what's going to happen next, or what should happen next, is a rally. It'll try to rally up, and then it'll probably come and test this downward trend line, which was the breakout, and right around this moving average. So this stock could see 120 fairly easy, and it wouldn't be a big deal. At the same time, we're going to look for a reversal and see if this negates, because sometimes these patterns do negate. And if we're looking for that, we need a clear break of the 138 level at this point. We've already failed, and as you guys know, I pay very strong attention to where we reject. It saved us a lot of money when we traded JMIA, for example. So ACTC, I'm going to just let's do an hourly. I really try to stay towards the weeklies on the weekend, but there's not enough data points, and as I've always said, you need at least 30 data points for any type of statistical significance. So you can see the pattern here. I mean, this is pretty clear on what's going on, right? I mean, you should be able to see this. If you can't see it, please let me know. and we'll walk through it. But here you have consolidation, inside bar, inside bar, inside bar, boom, breaks out, big volume. Clears this, pushes, finds a place where it's had enough, comes back down, breaks out, finds a point where it's had enough, and then you could just see these wedges. I mean, over, over, over. And if you're playing the wedges, I mean, even the one that failed, the one that failed this week, I mean, even that one held, right? I mean, we never even got below on the hourly, we've never gotten below that bar. So what's really interesting here, if you take a look at this, is we really, since this day, we had this breakout of this flag, right, this little pendant thing, we never, ever had a day where we went below the first hourly bar. That's pretty significant and something that you should be paying attention to. That just means that there's just consistent buying all day. Now, that doesn't mean that it can't trade down, which it will do. I mean, you got to be able to handle 26 to 24. If you can't, you have an issue. But you can see these wedges, right? So what we're looking for is, and what would concern me is, if we see one of them fail, and then we might test this level. But you can just see how we're getting bought the entire day and just setting up. And we're having these gaps where we close, then we gap up. We close, then we gap up. So pay attention to this stock, ACTC. There's not enough of a base, and there's not enough data for me to put it in the newsletter. But it could be a big mover. So this was one I threw out early this week, and let's go through it. Also, this video is probably going to be a little long, and it's in alphabetical order. So if you're looking for one stock in particular, just, you can fast forward it. So AMWL, so we talked about it here, and we broke a little pattern. And when we broke that pattern, you can see the wedge right here, right? And when we broke that pattern, it just traded perfectly. So I did the trade. But what you can see is we rallied right to this line, which let us know that we could stop here. But this pattern is extremely bullish. So you have the open as the low and the close as the high. So you have above average volume. I mean, you actually had the single largest buying volume day the stocks had, period. So that allowed me to stay in this and think about, we're going to hit this overhead, or we're going to try test up here. So this was a fairly easy trade to stay in, with this being your stop. I mean, as soon as it rolled underneath here, you had a failure. And that's exactly what happened here, right? We opened right to this line as we talk about these types of trades, and we always set our levels ahead of time so we know what to pay attention to. And then we tried to rally through it and get to this, but we failed. And then we closed at the low, and we're below this trend line. So I'm out of this. Right now, all I have is a stock that is above this line, and why enter here? There's absolutely no point. Now you have this higher peak here, but it failed. So right now on this, I would just, I got a lot of requests on this one, I would just stay away. Just let it develop and then come back and take a look at it. There's a lot going on here, and this is major. So if we can break this, pay attention to it. But then at this point, from 29 to 32, why get involved? Just wait for it to really set up. I'm not interested in 3-4 points. I'm interested in from 32 to 45. So, or 42 rather. So Amazon, let's look at it on the weekly. So we've been talking about this one, and we've been saying for a while now it's going to go one way or another. This is the first time that Amazon has closed below this trend line, and that's pretty significant. To me, it's stating that we expect more downside. And what we're also seeing is we have the 5, the 8, and the 21 day, and I mean that just happens to be the high, right, of the week. Now, I don't really believe in coincidences. So you could see what's going on here, and then you actually came right to this level which is okay. I mean, it's not the end of the world, but we could roll here. This is actually setting up to roll, and you have this. So you need to be really aware of this. You know, these peaks and how every single one is met by selling. And it is getting tighter and tighter. So it does mean that it's going to do something. What that something is, I have no idea. Now, if I was looking at this, I think it's going to break. And if this breaks, that means that the market's at risk. So, you know, if Amazon, Apple, Google, tech breaks like that, you're at risk to come back in a little bit. And we mentioned that in the newsletter where, you know, we saw some signs where we could test 21-day moving averages on the indexes. And I mentioned that in the letter. And that's okay. It creates a buying opportunity. Sometimes it's nice when they go down because you can get better entry points. So keep that in mind. But this looks like it can go to the 50-day, which it has not tested in a long time, and come in and, you know, then rebuild and go from there. This had a massive run from January on. So some consolidation is not the end of the world here. APXT, let's go to a daily on this. And again, the reason we're going to a daily is because we want at least 30 data points to determine what's going on. Anything else is not statistically significant. So, yeah, I mean, you can kind of see how it respected it here. Oh, that's interesting. Hold on. Let's go to here, actually. This is more statistically significant. So, like, what you're seeing is we hit here. We rally through this line. We reject on the daily. We hit here. We hit here. We open here. What's it do? Sell down, then convince us that maybe it's going to rally again, pulls the flim-flam. And then you come in the next day, and this is the perfect example of what I talked about earlier, where look at your open. And we can even drill down into this. As I said earlier, this is going to be a longer video. So when you see this, you can forward through it if you find part of it boring or if you just want to see your particular stock. Let's get more into this. It'll take too long. So let's do the 15-minute. So you can see, right, on this day, we open right at the line. We never go over it. So if you're in this trade and you watch this open and then you fall down, you can do one of two things as a stop. If you want to play it tight, is you can wait for that first tick down that tells you which way you may go and get out of it. And then sometimes you do get those pushes out. Or you can go out 15 minutes or an hour and just watch the first bar. And then if it undercuts that first bar, you're going to not have a great day in the stock. I mean, it's not rocket science. Yeah, I mean, here if you waited the hour, it was insignificant. So, you know, that's why it's always really cool to look at different time frames, because this would have told you here on the 15-minute, and I know people say that you can't look at a 1-minute chart. That's fine. You don't have to. I'll do it all day long. But you could even see right from the rip, if you were looking at a 1-minute chart, boom, 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 keeps knocking on that door and can't get through. So when you see things like that, they're significant, and you need to pay attention to them. So if we look at this stock, I like this base. I think it's a great base. I have no idea what they do. I'm not in it, but I like this. I mean, I've got a huge 4-point base on a stock that was $14. I mean, I'm setting up for a 20 or 30% move here possibly, but I need a significant close on volume, and look how the volume is decreasing, which means we're probably going to, roll. But I need a significant close above 17 on volume line above this. So we need to pop over this, something like 5.5 million shares, something that just says, okay, we're here and we're ready. So BFI, Burger Fee, I actually like their burgers. Not that that should be any reason to invest in the stock. I don't like the Weekly, there's not enough points, so we're just going to go back to the daily. BI. Okay, so what we see here is, let's stay at the daily. So what we see here is, here's a peak, and you can see how it gapped over here and then failed, right? And what we're going to see is, I can just tell by looking at this, you're going to see this all over the place. So after you do charts for a while, you can actually see patterns that people are probably looking at going, I don't know how the heck he sees that, but after looking at it, you'll start picking them up without even drawing the lines. And then you can see even this up top, right? So there's a lot going on here. This needs to be supported. I like this huge pattern. These falling wedge patterns with this actually as your flagpole, and then you have the falling wedge here. These are actually bullish patterns. It's just really, all we did here was just backfill, right? So what I need to see is I need to see some action here. I need to see this break, and I don't want to get into all these rays, but I mean, there's no reason to get involved in this yet. But we break here on solid volume, and this line is curling up. I'd be interested around 14 and a half, 14 and a quarter. Then we try this line and see what's going on. It depends upon our stop and entry if this makes sense to see and test this, because it's only a buck. But you could also wait for it to break above this line, and then you'd have a right shoulder reversal, which would be here, and then that would lead to this, which would lead to 17, and then a break of this would lead to a test of here, which is 19, 20 bucks. So that's interesting, and I'd watch this key level, but you're looking for huge volume there. So BLFS. So what we have here, let's look at it this way. Okay, so we're really overextended here. So you have this break here that you can see, 26 and 3/8, 26.35. So you can see this huge channel that it's just respecting, right? You can literally go from here up and just see how it's just respecting this line. And you can very simply just look at the other line that's right here and see how it's respecting this. To me, this is really overextended, and this is just a matter of time. These rising wedges, believe it or not, they end with something bearish. So what we're seeing here is as we push up, we could break this and then retest this level. At a minimum, if we retest, we're going to go to, this line here, which is 32. So I'm not crazy about this here. I mean, this had its move. Every one of these little bars, if you look at them and you look at these ranges, is met by a buy and a close that's on the low end of the bar, buy, close, low end of the bar, buy, close, low end of the bar. And you have this huge red bar that basically envelops this whole week. So that's not exciting to me. And we can't even rally to this opening point. Right? We can't even get close to that opening point. So why do I want to be involved here? I don't. Some people could say, I'm going to play it against this line and see what happens. On a probability basis, I don't like those kinds of trades, but I get it. I'd be more interested in seeing it consolidate back down to this level and roll, and then consolidate for a while, and then go higher. So no reason to get in this here. So this... we talked about, I think, at like 580, something around there. So you can see this original break, and this is not going to be significant enough. I have to go down. So let's get to it. You can see here, right? And this is the other line that we just had, but we're way past that. So you can see how 585 was tough. Reject, reject, open, falls through it, opens right to it, rejects, sells down, forms a wedge, breaks that wedge on the open. Open is the low. That tells you something. So open is the low, and then what do? We explode up, and then we explode through this level, and then we kept going. Now, you're getting toppy here, and some backfilling's not a bad idea. So if I was to tell you how to trade this, if you're in it, if you take out this 750 level and you take that bar out, you can roll back to $6. So just be careful here. I mean, again, these little thinner stocks, they're much easier to manipulate. This one in particular has a ton of volume, so it's much harder to manipulate. But just be aware of it. Disclosure, I had a position in this. I no longer do. Just the action in it on the last day. There was not enough follow through for me, and I don't like closing on the lower half of the bar. So it doesn't really work for me. It means that I could have some consolidation or a possible reversal. So I do think that this has way more potential than you're seeing right now. A lot of people haven't caught on to the name, and technically when you have this, 800 million share breakouts, they don't go away. I mean, they're significant buyers. So pay attention to this. But I think it's a little overextended now, and I'd like to see how it holds at this 7.25 level and the $6 level, and then go from there. So this one I trade, and it's always the antithesis of what you think it's going to do, right? So you can see how on the weekly we're here, and we look like we're going to run, and then we have this massive, but it's not a bearish engulfing. Let's collapse this for a moment. So you have this massive bearish engulfing, right? But it's not technically a bearish engulfing because you came here. But what's interesting is the close of this bar and then how that was the high. So that's still fairly bearish. And then when this happens, this move, we roll and we collapse. And now we consolidate, and then we break this level, and then we push higher, then we retest that level, and we push higher. And now we have this huge downward trend that's going since the inception of the stock. That's the negative. The positive is some of these lines were drawn before the previous week. So there's some pretty significant things going on here. We pulled back directly to a level that we had in here from this bar. We pulled right to the low, 113.26, and our low was 114. So we were within 70 cents of the bottom. That's pretty significant. Now, what I really like is this volume coming in, and this line is starting to curl up. Last time we saw something like that, this is where it starts curling up. This is where it starts curling up. So look for patterns like that, right? And if you can get ahead of them, there's money to be made there. Now, I don't want to get too technical, but we're going to have to here. So you can see how we broke this little trend. So now I have a double bottom in, right? I have a double bottom in, and I'm breaking this wedge, and I close right here at the, I think that's the 21 week. Yep, the 21 week. So looking at that, there's something here. So what would I do? I would test this and see if we're going to break through this big wick, through this big, bearish flag. And keep in mind, this was a dreaded H pattern, and we rejected that H pattern. So and there's a lot more, but we'll be stuck on here for a while if I keep getting into it all. But if you look at this, this can easily push to 164, 3/8. We break that, we're going to this. We clear this level, we clear up here, we're going to test here where there is some resistance, and then we're going to here. So there is a massive amount of upside here. And very little risk on the trade for that upside, right? So I don't want my stop this long. So then I would start drilling down into dailies and going, okay, oh, and then I go, oh, isn't that interesting how we draw it on the weekly and how it respects on the daily, and then how it goes. So looking at this, you could argue that this is a flagpole on a bull flag off a wedge break, and now we have an inside day. And now, whoa, what's the low? Oh, okay, the low just happens to be exactly where we would want it at the 200 day. That's not a coincidence. So by drilling down and looking at different time frames, you can really see what's going on. And let me put this up here again for people that are jumping around. So then we come across here. Now, I have no position in this, but I find this pattern very interesting. This is exactly the kind of move that I was hoping to see in AMWL, but we rejected. So take a look at what's going on here. There's your trigger, 144.15. It's clear as day. Get above this bar, open up above this, and you're going to here. And then very simply, my stop would probably be a close below the 200 day. So I'm risking 5 points to possibly test 20 points. So I'm at 4-1 there. But what it does do is it puts me in here for the larger move, right? So I'm risking 4 points to try to get to here. And there's nothing in here. Nothing. Right? There's no resistance. So 4 points, and then for 20, I'm at 4-1. And then on top of that, I have the opportunity for this and then even higher. And we can talk about process and how to control that risk later. But I would pay attention to this, and I would pay attention to this 144.15. It seems fairly significant what's going on here. And this volume is increasing, which we've talked about earlier. So CELH, the only thing that scares me is the amount of people that are calling, or not calling, but texting or messaging me about wanting to be in it. We've been in this since 35 bucks on the newsletter. Here's the buy price. And if you're looking at these videos and you don't subscribe to the newsletter, you need to subscribe to the newsletter because, one, it's free, and two, it's actionable. There's a lot going on in there. And we give a decent overview of what's going on the indexes as well. But so I have zero interest in adding to this here. It looks way overextended to me, almost to the point of forming a blow-off top. So, this is our 5 week. Just put that in perspective. The 5 week moving average is 52 bucks. You are, you go through this. Here's your 50 week, right? And you are triple your 50-day moving average. You are 300% above your 50-week moving average. This is not where you add to positions. This is where you start really tightening your stops. And pay attention, because see how we have this consolidations? But look at these long bars where it's just jumping and jumping. This is significant, and this is going a lot higher in my opinion. But could we go back to 52 bucks? Absolutely, in a heartbeat. So watch this, and if you really want to tighten your stop, you could tighten your stop right below the lows of the weekly bars. So you could put a stop right here, 55 bucks, and say, okay, that's enough. Some people don't want to go for the $10 ride. Then you need to start considering every rally selling into it, because this can happen. So, and it's giving us no signs that it's slowing down. If anything, it's accelerating. So it's giving us no signs of a slowdown. But what I'm saying is, when you start seeing this, everybody's paying attention to this now. So we could start seeing some of this action. But keep moving your stop up if this is what you want to do, and go from there. But that's it. We trimmed already on it. I think we trimmed here, and I see no reason. There's nothing in this chart that tells me that long term I need to be out of it. So I'm just sitting with it. But please be aware that you can go for a $10 ride. This is the weekly. Let's go to the weekly here. So, I mean, we really don't have enough statistical analysis for this on a weekly, but we're going to do it anyway because there's some stuff going on here that's pretty cool. So, we really need more data points, but here's what's interesting about this. This volume is sick. I mean, we've gone from where we're trading 1 million shares to where we're trading on average, you know, what, 1.3, 1.4? I mean, that's a pretty significant curve if you look at it from where we've been. And it's pointing upward. And now we have the single highest volume bar that we've had on the buy side since this started moving. Pay attention to those kinds of things. But what's really interesting is this, we sell down. This is our little bearish position. And then we rally to here, and then we're not able to close it. But what do? We gap up from this weekly level, and we gap right to the low here. Open here, test this, bounce off of it, and go to here. What happens the next day? We open right here, inside week, and look how it just stays here. And then what happens? It gaps again right to this level. So there is massive buying going on here. As far as levels, I mean, we don't have enough data points, but the way that this is trading is it's going to go to support levels, and it's going to test them. So, I mean, if you were to look at this pattern, what you would expect is you would expect an open, you know, here, if you're going to follow this, a push, and then a retest of this level. So this may be a level to enter. This could be a level to enter. I would watch those key levels and take a look at this. But something, I have no position in this, but something's going on here where there is just massive amounts of buying. And so I would really pay attention to that. And if you look here, this is why it's so important to look at, you know, different time frames on charts, right? Because it tells more of a story. And just because the bars are red doesn't mean it's going to do what we think it's going to do, right? And I want to point that out for a moment. So I keep talking about this, you know, this 3 crow pattern. This really isn't it because this was an inside day. But you have 3 red bars, right? 3 days of distribution, it's going to go lower. What happens? It takes out a new high. So, you know, nothing's foolproof. So the one that, boy, I have a lot of lines on this one. Let's go to a weekly and start getting rid of some of these lines. Oh, that's better. Stay here. So our bottom was put in here. The real trade and the real meat on this was made here, right? You can see this 42, 43 level. We go up to this 44.70. We break it, consolidate, try to close above 55. Can't. We're respecting this, and now we're here. Now, what's interesting about this week, and this arrow was drawn from before, but it's interesting that it goes right to the close. But what's interesting here is on this downward trend, the inception downward trend, we closed above it. So that's pretty significant. You know, fundamentally, I would be looking at this and going, oh, it's going to come in because the Super Bowl is coming, and then, you know, betting will slow down, therefore revenue will decrease on a quarter-per-quarter basis. The way the stock's acting is telling me that I'm just wrong and I don't understand what's going on fundamentally. And it's one of the reasons why I don't trade on fundamental analysis. So you can look at it, but if you try to trade on it, it's just a matter of time before it disappoints you. So what we're looking for now is we need to close above this level, right? We need to close above 55. It's fairly obvious. Should be fairly obvious to everybody. This higher high peak is nice, but I need to close above this. If this bar closed here, you'd be here in a week. So we need to see that. There's a lot of people that want to be involved in this, and we're testing support levels and we're moving up on them, right? So here's the 44 level, boom, we test it on the weekly, and then we break. So your key level on this is right now should be a weekly close above $55. If you see that, you should easily come up to here and retest this. And what we're seeing with that retest and why this would be significant is we can get back into this channel that you should be able to see. And if we get into that channel, 64 is just the beginning. We'd be looking at much higher pricing. You could be looking at $75, $85 by the time it starts hitting the upper channel in there. So definitely one to watch, and watch that $55 level. This is one we traded. Let's take a look. I believe, let's see here. Let's go down to here. So our stop was 1550. So there's a reason why we put these in here. It closed below the 21-day moving average is bearish. It was. But you can see what's going on here, right? And why this was our stop on the trade. Look at what's going on here, right? You're in at 19. We have a really wide stop on this one, but it respected it the whole time. And now we challenged the high, and we didn't close near the high, but it looks ready to really move. And then it's interesting because how these peaks are there. So, but you can see, here's your flag, and then boom, we break out here, and then we go and we push. And look at the volume accelerating. So if you're in this from the newsletter, there's nothing to do here. I mean, there's really very little to do here. We had some support here and we broke that, but overall, there's really nothing. If you're in at this 19 level, there's really nothing to do. And I should really do an update on this one for people that are in it in the newsletter. At this point in the game, I don't want to be involved or add to it until I clear this high. And the way this is setting up is this should attack this high. You can just see it, right? This should attack this high and move forward. And, again, after a while, you'll start seeing stuff. But you can see, right, how you have this huge wedge there. And it's on the bottom, too. But what's interesting about this is look at where it closed, right below that, right? So we might roll back down to this level or this level. But eventually, I do think it, pardon me, it pushes. So keep that in mind. I've been saying for a while that I think that this is going to roll, and it is. So we'll get into the FNGU trade today too, I think, just even though I wasn't asked about it, just so we can review it. This is just textbook awful. So here's our level, right? And we broke through it, and we tried to close and rally on the week. But you have all this consolidation, and we're rolling. So this stock, and I don't want to get into the political reasons for it, but we're at least going to here, right? We're at least going to go to 235. I mean, it's just inevitable that this is going to roll. And I see no reason to be involved in this. The only thing that's going to negate this move down is closing above these moving averages and a higher weekly bar through this, all this resistance up here. If we don't do that, get out of the way. There's no reason to be in it. This is actually setting up for people that want to be, in my opinion, you could short this. So, bonk, 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 right? And then we break here and then roll. A close below this, you're going to test here, and then you're going to go to here. And this can get a lot worse. So it's a short at best. If you're long it, there's much better plays. I would take a look at, if you're looking for like big tech, which I got a couple of requests on, you need to look at Microsoft's chart. I don't have that in here as a request, but I can probably remember that when I get into the M's. So this is one we traded off the newsletter, and then we got stopped out. But we talked about it a lot on Twitter. So here was that falling wedge we talked about 2 weeks ago, and then we talked about how it broke. Right. So here's your low, right? And we respected this, and this is when everyone's thinking the sky is falling. But if you look at your weekly levels, right, you knew it was just forming a wedge. Very similar pattern to what we see going on in NIO when I look at it. So what happens is eventually we got this bullish engulfing week that just ran right to here, and you're like, okay, well, maybe it'll stop. Well, the next week, in the beginning of the week, we open right above that wedge, and what happens? We run, and then we gap lower, people think it's over, and then we run. Now, this is exhibiting signs of exhaustion, and the reason that I can say that is because you can see where we closed on the week. So we're in that lower third, not even in the half. That lets me know that people think that we're due for a pullback. And in 2 weeks, we've gone from 47 to 80. There's no reason that this thing cannot roll back down to $51, $52 and come right to this level. So if that occurs, I would look for another setup and be a buyer. And this is just the daily to kind of tell you what's going on. I mean, this is completely set up to roll. So it doesn't get more bearish. It's impossible to have a more bearish bar than the open being the high and the close being the low. It's just not possible. So when you see this solid, it's telling you something. So you're going to roll, right? And maybe we hold here. I doubt it. But it looks like to me like we're going to roll to about the 64 level and then test this. And then if we break that, I really think you can wind up going back to 51, 52 fairly quickly. So just watch this. If you're long it, this is a pretty decent spot to reduce your exposure. And if you're fine with this ride down, hold that position. So this is fascinating to me, this GME and the people that are actually shorting this. I get a lot of requests for this. I mean, I have absolutely no idea what you're thinking. You're getting in front of a train. I can't make it any clearer. You thought what you saw with Fubo was a short squeeze? That's nothing compared to what can happen here. So, I'm just going to touch base on this. I have a position in this. I added to it on Friday. I'm down it. But I just want to talk about position size for a moment. You can have a position that your stop is very wide if it's a small position. So in other words, I don't have 50% of my account in this. I have a small piece of my account allotted to this because I think that this could be a big lotto. Like, I think this can hit. So I want to have some action in it, but I have to understand that I can go back to 20 bucks. I still wouldn't move out of it because my position is small enough that a move like that doesn't really affect me. If you have a 1 or 2% position and it went to zero, which this will not go to zero, you can just ride with it and just leave it alone and just let it do what you think it could do. And I've touched base on this before. When you have 70, 80, 90% of the stock short, they have to cover. So all you need is them to feel comfortable that, it's really going to roll. And what did it do? It couldn't even take out the lower low. Now, if it breaks this 33.05 and you're long and you're scared, blow it out. Just blow it out, and then find another spot to buy. Because if it breaks this level, realistically, you're going to 29. You're going to go to 31, and you might not want to go for that ride. So keep that in mind. I mean, it's nothing for this thing to come back down and test the bottom of this bar and then just consolidate and then just go higher. But if you think that this is now going to roll down and then a month later, it's going to be back down to here, you're delusional. I mean, you have 77 million shares out there that have to be bought, and they will be bought. So someone will come into this that's a much bigger player on the long side and squeeze. And you've seen these kinds of squeezes before, right? I mean, we saw it with Herbalife. I went on a little tangent on, this is where that famous short seller put a sell on Tilray. That's great, except that you just, lost 300%. So when you see squeezes like this is exactly what I'm talking about, where this can happen on GameStop. So that's why I have a position in it. But what you're looking at is, this is interesting too, right? So like you can even see when I talk about the longer, the third, right? How you're on the low end here. I mean, this signified that this move was probably over. But from where we were in this at, this was a while ago, but where we were in this at, who cares? So, you trim on the way up and then you go from there. And then you can see how it can't close above this and boom. And now we have this. And we can get into this one a little bit later. So that's my short squeeze talk. So Google on the weekly, these lines were drawn, looks like months ago. We had a long on this and we got stopped out of it in the newsletter. So I thought on this break we would go, and the stock had other ideas. So what we've done since then is form this little pattern on the way down, and then we can't close above this 1793.64 level. And now we're knocking on 1733's door, and we didn't close below it, but we're right there. We have yet to close below this on the weekly. If we do close below that on the weekly, you're going to the 21-day. So you're going to wind up rolling to about 1665. And if we break that, you're coming to here, which would be 1500. So I think big tech is kind of rolling over the bigger mega caps. And you're seeing less interest in it when you look at the volume. So this is not a place where I would be adding to these. If I wanted to add, I would be looking at this break, this convergence break, and pushing through. That's where I would look at it and say that this move has negated. We set up a bull flag, which some people could argue is exactly what's happening here. And then we break through and push. So ILMN, you're seeing a huge base. Right? We're seeing this huge base, and we're closing above it, but then we're not really staying above it. So let's take a look at it, and let's formulate a plan, but this is not the plan. This is not to buy here. I mean, look at this. When this goes, it's going to go. I just don't know, what that driving force is. But look at, this thing has been basing for over 2 years, and this base is wide, and it's been tested. And when this goes, it's going to go. It's going to go back into this channel, and it's going to have a substantial move. I don't like these long bars where they're in the middle of the moves. They usually signify a change in trend. Historically looking at it, what that change in trend means is that we're going to roll down. You can kind of see the pattern. So until I have confirmation that we're going to break out, I see no reason to be involved. And you could even argue that confirmation is way above this. So to me, what I would be looking at is, a close above this. It might be worth it to wait till you have a higher high peak here. Not this, because this is failed, but look for this 402 level, a break above that, and we could move. But you need to see huge volume in this too. So I mentioned this one the other day, and I don't have a ton of data points on it, but I just want to talk about this for a minute. So my trigger was this, right? And then I drilled down and looked at a smaller time frame and then made a decision on where to buy. So I'm just going to walk through it real quick so you can kind of understand a little bit of the process. So here's that point. Here's the 15-minute bars. This bar closes at the high. This one gaps right over that line. There's your belt. There's your buy. This was my stop. I mean, it was a very simple trade, right? And that's a really tight stop, 25 cents, but I didn't care, because if it did this and then broke here, I knew I was done. So what we're seeing is, now you're seeing this huge push, right? And then I'm in it. Now, very simply, if I'm concerned about this because of the market, I can just move the stop to my cost. I didn't do that. I just stayed in the trade. Even when it ran up like this, I didn't get out of any. I'm holding it. And I think that I'm okay here, but I still know where my stop is, and I would watch this level for a reduction. If we close below this or hit below this, I may reduce a little bit. But I was talking to somebody the other day about this one, and they were like, I'm waiting for the SPAC news to hit, and then after the SPAC news hits, that's when it sells down, then I'm going to buy. That's exhausting. That whole process that he explained, I'm like, not only are you predicting a move, you're predicting two moves. You're predicting that the stock's going to go down, then you're predicting that you're going to pick the bottom, and then you're going to predict that it's going to go up after you're in it. Please don't take offense to this, but the stock has no idea that you're in it. It doesn't care. Nobody cares. So you need a process. And what I was trying to explain, and this is a better place to do it, is you need to have a risk level associated and then where you think it could go. So when I entered this, I'm entering it with a 25 cent or slippage, 35 cent stop. I think it can go to 22 bucks. I'll do that all day long. I will risk 35 cents all day long to make $2.50. So the risk versus return is there. It makes perfect sense. That's my trade. Now, I'm not predicting that it's going to here. I think it's going to here, but I don't know that. It could easily roll. And if it does roll, I have my stop in place. So I'm in charge, not the market. The market's not going to do anything to me. I'm in charge of what happens. I'm in charge of how much money I lose. So yeah, you can have stops gap down on you and things along those lines, but you need a process. And I can't stress that enough. Even the worst process will get better with time. But prediction, and these people that think they're going to look at fundamental analysis and just do a prediction on where it's going based upon that, I would argue that I don't know one professional trader that's been doing this for decades that just looks at fundamentals or tries to predict exactly what's going to happen. So keep that in mind. Here is Jumanji. Let's look at the weekly. So we know where our levels are, right? We've been playing this one. We know that this is a significant level. And we tested it here, this 4090 level. We hit it 7 times when it was in the newsletter. And we trimmed when it went into it. We were in cheaper, so it didn't matter. You're closing right here, right? So you broke your little wedge. I'm pointing, that's not going to help you. So you broke your little wedge, and then we're going to go higher, and this is what happens. So overall, I think that you're setting up for higher, but we just don't know that yet. And that's something that we have to, figure out. I do like it. And I do think that it can push higher, but we need to watch these peaks. We need to understand, that it's got to close above this level for us to really get involved in some significant way. And we can drill down into it on the daily as well and figure that out, So let's see what happens with it here. But, this close right here on that level, I would have liked to have closed above it. Right now you just have like a double top forming. So let's see how it acts, and then we'll go from there. So mRNA is acting exceptionally well. We're starting to curl, and you should be able to see this wedge break now. Hopefully you can see it. There's one. There's two. So you can see how we finally broke some of this downtrend. And now we're going to go for the next downtrend. But you can see how we broke here, held this level, and now we're going to push higher. I've stated this. Fundamentally, you've gone through phase 1, phase 2, phase 3. Now the drug's out. All that's left is the problematic stuff with the drug, and that's my fundamental analysis on this. The chart was telling me a completely different story, right? This chart is telling me it's going higher. You have this wedge. We broke this wedge. This chart's telling me that this is a flag and that we're going to go to this level and we're going to test this level. So I would not be surprised to see this rally despite what I think is going to happen with the stock. So I would watch these levels, and you might even want to look at this 138 level. You get through this, you're going to here, you're going to here. So watch 138. That's a key level for the stock. Some people could play this level and then use this as your stop. That's up to you. The way these averages are starting to turn is very positive. This volume is awful. But I'd like to see a push and a breakout. And it could do that. And that's why I stress, like, people that are trying to trade off a fundamental analysis, it just simply doesn't work. I mean, it can get you in the right stock by doing your analysis. There's some people out there that write really good reports, and it can get you in the right stock, but it can put it on your radar. But unless you have the trigger and a process, it's just a matter of time before you take a hit. So this is NGMS. Okay. So what we have going on here is just rally, consolidate, and by now you can see this wedge. I shouldn't even have to draw it. So I think that you're in great shape here as far as consolidation. You've pulled back. You're respecting this average. I have no trigger on this stock yet. There's no reason why I should be involved in this. There's just nothing. There's just nothing going on here that would lead me to need to get involved yet. Well, I would look for a break of the higher peak, and then we can kind of go from there. But just nothing there yet. So NIO, we talked about this. I should have that stuff. There we are. So NIO, I talked about this. We talked that we could fill these gaps. Well, we talked that we could fill this gap. We talked about it on Twitter that it's going to happen. I'm in at $48. I've added to it. I'm not really concerned about it. The volume on the downside is significantly less than any of my volume up buys. This is profit taking. It's going to happen. I'm still in this channel. I haven't broke out of that channel. You just need to watch the key levels that we set. We have a $54 stop. It hits 54, we'll sell it, we'll make our money, and we'll go to the next one. But look for a trigger here coming shortly, in my opinion, of over this bar, and that's going to trigger us higher. So I think we're setting up here. We've broken this wedge down, filled in the gap, and you can argue that you're having an island gap reversal here, but this part is up, so not really. And just watch this. I mean, honor the stop, but I'm still in here and I'm comfortable with what I see. But it can go to 54. I mean, and it can go lower. So keep that in mind and just stick with your process. All right. Give me 1 minute. All right, sorry about that. Just a quick phone call. So NNDM, let's get back into it here. So NNDM, we've been talking about for a while on the weekly. And this is our weekly, and this is the wick, 1320, 705. You can see the levels, right? How we're respecting them. I still feel that we're looking for this 1320. I mean, the stock comes out every other week and issues a secondary and people buy it. I have a clear breakout here. I mean, even on a weekday, I have a higher high bar. I'm not crazy about the action, but you know, if we break below this, we're probably going to 9.5 to test it. Still would not scare me out of the stock. Might actually get me more interested in the stock at the 9.5 level. And right now, there's no trigger here, right? So our next trigger really is a break of this 11.5, a break of this flag. Hopefully we consolidate in here before we push. But if we do get back down to this level, I may look for another trigger to add to the position. So I mentioned this one a couple times, and it broke out. And this would be in the newsletter, but there's just not enough of a base and there's not enough data to support it being in the newsletter. So what we're going to do is we're going to look at this as just trading it and staying in the trade, but I'm not going to add it to the newsletter. I would look at this and I would look at where it closed on a really, really bad day, right? Everybody took a little hit in the market. It happens. But what you're seeing here is you're seeing the low was respected right here on this moving average. So we're respecting the low, right? We've tested, we've respected it. We should have rolled because boom, boom, boom. Now we're lower. We didn't. We opened, we tested it, and then we moved higher, closing almost at the high of the day, 52.61. That's significant. So I would really pay attention to this. The other thing I would notice is, while it's not one of these spiky bars, this is pretty much one of the top highest volume days stocks ever had on a weekday going into a shorter week. So I think you're good here. And I'm long it, and I have a position, and I've done nothing with it. So this one I've gotten pretty excited about, and we're going to look at the weekly here and just see. I don't see enough data. So let's go back to the daily. So what's going on here? What's going on here is that it is consistently failing to do what it needs to do. Now, ARK took a 500,000 share position in it. It should move higher with that kind of buying going on. That's not what's happening. So you see this massive red volume, which is one of the worst selling days we've had. We rallied to this, we failed it, and we just happened to close, and this line was drawn, a long time ago, but we just happened to close below the wedge. This is where we open, this is where we close. So to me, and we're right on these moving averages, there is nothing to do here until on a daily chart we get a close above this line, because we've been unable to do it. Right? Now, we traded this one earlier, got in at 16 and then traded it up and then got stopped out, blew some out along the way and then got stopped out, I think, at like 24. This is setting up, yes. It's just not there yet. So let's keep an eye on it and let's wait for that trigger. And I like when we break these supports and then we can kind of move higher. But what you really want to see is you want to see this confirmation, because we could easily just roll again and go back down to 23 and then you're watching it for a month before it moves. So this is RCUS. So I have enough data here. We're going to look at a weekly. So what do we see going on here? Right? What do we see happening? We see 37.41 being respected, and we're unable to close above that. What do I like? I love this. Like, look at this deep base, right? So, and you're starting to peak up a little bit. You came down and now you're starting to peak up. We had this huge run here, right, on this week where, I guess the stock was going to do something fantastic where you had like 100% week, right? But what you're seeing is you never got to here. You never even tested this. I mean, if you did a fib retracement, this is probably like a 38% level. I almost guarantee it just by, eyeballing it. But so you can see how we're acting, right? So what do you do here? To me, I would not touch this until we close above, I wouldn't even wait for 36, 33, which we closed at. I want to see a close above 37.41 because then we're above this huge flag if we get above this 37.41 level. And I have all this. So I have this huge deep base, which you can call a cup, and then you could even see the handle develop here. But huge deep base where I'm down 20 points on a $37 stock. This can go. This could really move. So whoever gave me this one, this is not my idea. Just pay attention to this. 37.41, and this can continue to go. And you want to make sure that weekly volume is above this line. And the higher, the better. But just make sure of that. So this is snow, and I'm going to do a daily on it because we don't have enough volume. So let's go here. And you can just see the wedge. You don't need me to explain it to you any longer. You're starting to see these patterns, right? They're starting to become second nature. 319 is a key level. Watch how we failed, right? So you're starting to see other key levels. And we closed right below this one, even though we held here before, and that became resistance there. So this, to me, is probably heading back down to 265. I have a small little pattern here, and we're rolling. And what does this look like? An H. And then what happened to the H? It failed, right? This is a dreaded H pattern. So we're setting up another little H right now, aren't we? So where does that lead us to believe? That we're probably heading to 265. I would not be in this. There's nothing here that shows me I have all this resistance. I have all these levels that are being respected that we can't even get above, and now we're just breaking down through other support levels. Volume has fallen off a cliff. No one's paying attention to it anymore. So I would look at 265 and see if it holds there and go from there, but there's no reason for me to be in this right now. So this is solo, and I'd like to have a little more so we can actually see this. So here's, no interest, no volume. All of a sudden, we had that one day, and then you had all this on the EVs. What's interesting is that the volume is starting to pick up again on the weekly. So we are consolidating, and what I would do is I would focus on this for the person that wants to be in this. So this week here, you have 5 to 1360. So we can easily go back to this level. We could easily get back here. Now, what do you need to see? You need to see a close, and I would have liked to have seen a close on the high, but you have a little wedge here inside this flag, and we're above that wedge, but I need to see a higher high close, something a little more bullish. This volume was great. Theoretically, you could buy this, and then this is your stop. If you clear this 5, it's done, but if you want to be in there, but I don't see it. And here's another little resistance point, right? 827, so we're unable to close above that. So I need to see this push. And we could use that. We could use that as our pivot. So 827 pivot. And then what you would want to do is use the low of that bar on the weekly, most likely as your stop, and see if we can do this again. This is kind of setting up. So keep it on your radar. TDOC, just to put it in perspective, these lines were drawn back here. So, you know, there's a reason why these lines are there. Everyone's getting excited about this one again. I get it. There is some bullish stuff going on here. There's also, some more consolidation that could happen. So this 185 level, we can see how we're trading between 185 and 237. On the weekly, you can just see that 237.76, we have a seller. We hit it to here. We missed it by $1 on a $200 stock, and then we hit here. Now, what's interesting about this, as I said before, these lines have been there for like months. What's interesting about this is the low was this wedge, right? So we have tested this and held, and a pretty bad tape on Friday. So that's significant to me. So what I would do is I would pay attention to this and set an alert, and a close on the weekly above 238 would have me interested in this and thinking that it could move. And when this moves, it could really move. There's an enormous channel here that it's going to go right into that has this set up to go higher. But I need to see this break first. This 238 would be your pivot. So TGTX, you had a huge move off of here. It's way ahead of itself now. The other thing that you're seeing is this level is becoming problematic, right? The top of that wick is problematic. You should be able to see this, where we hit it and bounce off, we close at it and reject the next day, and now we're here. So this can easily go back to, and I really like when stocks do this because it gives us a little ledge. So this could easily roll back to the 42 level. It could stop here, test the 8-day. So there's a couple key levels here that you could look at and say that they're of significance. This is of significance. This is of significance. This is not a bearish engulfing because the high, the close, and the open are not over it, but this is pretty negative action. Closing right here. So let's see how we act here, but I don't see any reason to get involved in this right now, and I need some more consolidation. I don't even want to close above here to get involved in it right now. I need to see this thing consolidate and show me that it can hold these levels. This has false breakout written all over it where we push higher and then fail. So just watch it. There's a little wedge here. That's good, but overall, this is pretty reversal action, we'll call it, that we're going to probably consolidate or test some of these levels. So we've been talking about this one for a while, and this wasn't my idea. This was something that one of the followers threw out there, and they gave it around this level, and this is when I said, you need to pay attention to it. This was significant. So the 760 level, when we closed above it, was fairly significant. Testing it again and not breaking, significant. And then what did we do? These lines were already in. So 1082, we ran right to. We hit here, and then we just ran all week, right? So we didn't close at the high of the week. I'm not concerned about that. What I'm concerned about is if we close down in this lower half, and we didn't do that. And look at the volume. The volume's sick. So I'm comfortable that our target is still intact, and we're looking at 1761. So I'm in. I haven't gotten out of this yet. There's no reason to. So TLRY, I think we did this, and we showed these levels on the daily. So what we saw here was it tests this level, right? Gave us a clear indication on what's going on, broke above this first time. And I want to state this because it's significant. This is the first time in years that we have done this, that we have broken above one of these peaks. So that's significant, and it needs to be warranted and looked at, because look at the volume on that too, right? So like, it's not like there weren't people in there waiting to sell that, rode this thing the whole way down. Now we're breaking through. Now, could we have had better action on Friday? Absolutely. Friday was, reversal day on a lot of these stocks, and you can see that. That doesn't mean it's not going higher. That just means it's not going higher right now. So if you're really concerned about it and you want to protect what you have, I would use this level as a place to trim or to sell. From where I'm in this, I have no interest in moving my position. I think that this is setting up for what I would call a secular move higher. And I think that we could be, the next level really was like this 46 level. There's some here, but you can see there's no real volume. So this can really go. And I don't want to get into the fundamental reasons behind it, but there are some driving forces here that are going to, continue to increase the action. So TPGY, you can see this wedge by now, right? And we really should be looking at it daily, but you can see it. Boom, here's your open, failure. There's no reason to be involved in this yet. I mean, you're right to here. So what I would look for, I like this volume, but you can see the rejection, right? You can see it, rejected. And I love these convergences. That's not the one I wanted. So what we want to see is a break of this, right? So watch this convergence level, 27, 29. I don't know what they do. I'm not familiar with the stock. But if I was looking at trading it, that's my crux right here, 27, 29. Twitter, again, I don't want to get into the politics of this. Let's just talk about the technicals. This is the weekly, and we'll drill down into this. You can see how we, right below support, closed the low of the week, breaking peaks, rolling here. I mean, we can easily see the $37, $38 level and go from there. So let's see what happens with it. But I mean, this is a classic failure. Boom, boom. And this leads me to believe that you're seeing some massive selling by institutions. There are cycles to these things, and I don't want to get into what people's beliefs are, because we're here to learn how to trade and be profitable and consistent. But there are patterns of human behavior, and the first one is, the guy on Twitter will say, I'm getting off of Twitter because of X, Y, Z. Okay, they get off. That's not the driving force behind this. The driving force behind this, of the Facebooks, Twitter, Google, Amazon trades, where you could have significant issues, is when you see the unions going to their institutional investors and the pension fund guys saying, we don't want to have anything to do with any kind of censorship. And when that happens, these things will just be puked out. And that's one of the reasons why I'm avoiding them. There's a lot of fundamental risk to them right now. And, we're just seeing who can be more woke, and it's just silly. And what will happen is these things will come down. They'll change their behavior, and they'll come up with some new plan, or they'll go by the MySpace. And just to get into it a little bit, this just was so disappointing, because it was setting up, and then their analysis of what they should be doing, this is Snap, their analysis of what they should be doing to be, like the other guys, it's just silly. So I think you have some risk here. I think you have a lot of headline risk, and it's not something that I want to be in. I mean, on the other side, I would be short this here and going here. Do I think it's going to zero? No. I think that they're going to institute massive policy changes across the board when this goes through it. And don't forget, there are 48 states that are suing Facebook right now for privacy and antitrust. So there's a huge overhang to this, and it's one of the reasons why on this trade, and you'll see an update on it this week in the newsletter. We talked about this 21-day and it closed below it. Everyone that was in this, because we were in this trade, this is where we trimmed, this is where we bought, we made 20%. The stop, we talked about trading this breakout, we traded it. We did not get to our 320 target, we got to 310. But this is telling you, this FNGU, that we're rolling and that we could be coming down here. And this FNGU is Facebook, Amazon, Apple, Google, Twitter's in there. It's just a 3x ETF. So just keep that in mind. I don't care where people stand politically on what they think that these companies should do, but what I'm saying is that's human behavior and that's how we make money. So that's it in a nutshell. Message me with any questions you may have, and we will go from there. Thanks again for all your support, and I'm having a blast doing this, and we'll continue to do it as long as you guys find it helpful.